Okay, so like we agreed, they were going to go through the retained income note and the share capital note. So we'll first go through the formats. We've done this, but just to recap, so with the retained income note, you have the balance at the beginning and then the profit for the year, profit after tax for the year. And then if there's a repurchase of shares, there's also a portion of the repurchase that goes through the retained income. And then you also take into account the dividends, and then you have your balance at the end. So this is the format. You have the balance at the end, at the beginning, you add the profit after tax, you deduct the repurchase, the amount for repurchase of shares that has to do with the retained earnings, you deduct dividends, and then you have the balance at the end. And then we have the ordinary share capital note, whereby you have the balance at the beginning, and then when you issue new shares, you also have the issue of shares. And then if you repurchase shares, you're going to also have the repurchase of shares, and then you have the balance at the end. So these are all the things that you need to know. So what we're going to do is that we're going to go through this. We're going to do a question whereby we are doing these two notes. By doing these two notes. So complete the following for the year ended 28 February 2018. Income statement, we're not going to do that. And then notes to the balance sheet for ordinary share capital and retained income. That's like 14 marks. So we're going to do those notes together. Sonke. So we're going to go through the information. Okay, I'm looking for the part where we're going to do the solution. It's 3.2.2. Question 3.2.2. Yes, it's this one. It's our answer book. This is our question. So on the information, we have the balance sheet totals on 28 February. Remember the accounting period is from 1 March 2017 to 28 February 2018. Right. So we have our balances. Ordinary share capital 2017, 6,976,000, which will be our balance at the beginning for ordinary share capital. And also we have 326,600, which will be our balance at the end, at the beginning for retained income. And then the 2018 one will be the balance at the end. So we have the balance at the beginning and also the balance at the end. Right. So this is it. So what you're going to do here is that on this part here, you'll be writing the, oh no, I think it won't allow me to edit. Okay, it cannot allow me to write on the right. So what we're going to do is that we're going to create a table like this, because if they require a note like this, it means that you have to do it. So on this part here, when you see 1,480,000 at the end here, they've already written the one at the end here. It's where you write the number of shares, and then on this side here, it's where you will write the value of the shares, the cost. And then here you're going to write what did we do? Did we issue shares? Did we repurchase or whatever? So yeah, let's create something like that, of that nature. Let's create something of that nature, because it's required like that. Could be. Okay. So we're going to insert another column is inside here. So, column on the left is so we have our ordinary share capital. We're already given the amount at the end. $1,580,000. Just going to do this. Okay. Just make this smaller. We can answer in here. So right, we have the yes at the end, and then the amount is the 8,816,000. This was given on the answer, whatever. So at the beginning, we have the value at the beginning, which is 6,976,000, right? So we have to find the value at the beginning. So to do that, we have to know the number of shares that were at the beginning. So we're going to look at additional information that has to do with ordinary shares here. So here we come. So authorized share capital is 1,600,000. So this is the total number of shares that we can issue to the public. Is the maximum, like the total number of shares that we can issue to the public. It's 1,600,000 shares. So they're telling us that on 1 March 2017, 80% of the shares were in issue, right? So we're going to take 1,600,000 times 80% to find the number of shares, right? So we get 1,280,000. So this is what we're going to write here. We're going to write 1,280,000. So that is the number of shares that were issued at the beginning of the year. And then on 1 May 2017, 300,000 shares were repurchased at 465,000 above the average price, right? So here they've made the calculation of the price, which was above the average share price, right? So they're telling us what? That 300,000 shares were repurchased. So on the repurchase, we're going to write what? 300,000 here on the repurchase. And we have to show brackets because a repurchase, that's what reduces the number of shares, right? So there was a repurchase, and to get the repurchase for the ordinary share, we have to find the average. To get the average, we take the value at the beginning because there was no issue before the repurchase. If there was okay, now because there was no issue, we take the value of the shares at the beginning divided by the number of shares, which means we're going to take 6,976,000 we divide by 1,280,000, and the average is how much? It's 5 rand and 45, right? So we take the 5 rand and 45 and multiply by 300,000. When we find the average, we multiply by the number of shares which are repurchased, which is equals to 1,635,000. So this is the value of the repurchase, right? So I'm going to tell you what we do with the other information of the repurchase, because a repurchase affects the retained earnings and also affect the ordinary share capital. So you have an amount, the repurchase shares on an amount. So you calculate the average to find the amount that is going to be taken out of the ordinary share. And then the excess, the rest of the amount is taken out of the retained earnings. So on this case, they were like 300,000 shares were repurchased at 465,000 above the average price. So this 465,000 is the one that's going to come out of the retained income. They've already calculated that for us. And then our job was to calculate the average to find out what amount was taken out from the ordinary share capital, right? So the 465,000 is going to come out of the retained income. And we're going to do that just now. But I want to explain something to you. So if maybe there was an issue before the repurchase, what we're going to do is that we're going to take the value of the shares at the beginning, and then we add the value of the issued shares, and then divide by the number of shares at the beginning and add the number of the new issues that were issued, so to get the average. But now, since there was no issue before the repurchase, then we just take the value of the shares at the beginning and divide by the number of shares to get the average, which is going to come out of the ordinary share capital for the repurchase of shares. And then the excess is going to come out of the retained earnings. So this 465,000 is going to be deducted out of retained income. Here is where we're going to record it. For the repurchase, it's going to be 465,000. Right. So we move, right? 31 August 2017. Interim dividends paid, 30 cents per share. So whenever we talk about dividends being paid, that always comes out of the retained earnings account, right? Oh, I recorded this on the wrong one. This is the other ordinary share, which was here. So it's retained income, repurchase of shares, 465,000 inside the brackets. So when we talk about dividends, dividends come out of the retained income, right? So you have to note this, that dividends come out of the retained income, and then you will have to separate them because there's interim dividends and there's final dividends. So both of them come out of the retained earnings, right? So I think I'll just add 2 rows to show which kind of dividends to show here which kind of dividends we're talking about to separate them. Right. So here we're going to write interim. And then here we're going to the final. So the interim dividends here on this case is 30 cents per share. All right. So 30 cents per share is like 0.30 multiplied by. So now we have to find out how many number of shares are in issue when we do this dividend, right? Because we'll have to go back to the ordinary share capital to find out this, right? At the beginning, we had 1,280,000 shares, right? And then now we've repurchased 300,000 shares. So when the interim dividend was paid, we had 980,000 shares. So we're going to multiply that by 30 cents to get the total amount of the repurchase, right? Multiplied by 980,000, because this is what we have. And then here we're going to have 294,000. This is the interim dividends. And then on 31 October 2017, additional shares were issued, but they didn't tell us the number, and they also didn't tell us the value. So this will be our balancing figure, because you see, it's the only missing puzzle. We have the balance at the end, we have the balance at the beginning, we have the repurchase, but we do not have the new issue of shares. So what we're going to do is that we're going to take 1,280,000. Now we want to find the number, right? So we're going to deal with the column for numbers. 1,280,000, right? And then because we don't have issue of shares, we're going to plus that. Then we subtract 300,000, right? And then we're also going to subtract the balance at the end to find the new issue. And the new issue is 500,000. So 500,000 shares were issued. So also here on the value, we're still going to do the same thing. At the beginning, 6,976,000. We're going to subtract the repurchase of 1,635,000, and then we're going to subtract the value at the end of 8,816,000, and then we get the value of 3,475,000, right? So that's the new issue, and then we will move from that, right? On 28 February 2018, final dividends were declared. And here they didn't tell us how much or the cent. So to find this amount, we will have to go to the balance sheet. The declared one is usually on the account shareholders for dividends. So we're going to look for that shareholders for dividends and see if we can get it. There's nothing in here. You might find that it's also a balancing figure. So let's just put everything in the missing puzzle, right? So the dividends, the final dividends, we have no information to work with. And then the balance at the beginning we're given, right, of retained income is 376,600. And then the balance at the end we're also given. It is 384,600. And then as for the profit after tax, we had to do the income statement. So whatever amount you're going to get from the income statement would actually, you would get marks even if it is incorrect for the profit of the year, right? So, but let me look on the solution of this to find the net profit after tax, right? So the net profit after tax is 959,400. But whatever amount you got, you will get marks for that because you know and understand the principle, right? So you see right now, what it's missing is the final dividend. So to find the final dividend, we have to is the balancing figure. So we'll start from the bottom. And you know, every time we start from the bottom, whatever was added, we subtract, whatever was subtracted, we add, right? So let's get started. So the balance at the end is 384,600. We're going to add the interim dividends of 294,000. We're going to add the repurchase of shares of 465,000. We're going to subtract the profit after tax of 959,400. Then we're going to subtract the retained income at the beginning of 376,600. And then here we get 192,400. And this will be our final dividend. Right. So the total dividends for the year will be we're going to add the interim and the final dividends, and we get it will be in brackets 486,400. So this is how you do the ordinary share capital note and the retained income note. There's nothing complicated about it. You just have to understand the principle. So yeah, until next time, we will discuss which question we'll be doing next. Goodbye.